Hello, everyone. Welcome to today's show. And if you're joining for the first time, this is part of our digital transformation series, for which we meet every Thursday at 5:30 p.m. Eastern. We pick one topic related to digital transformation. And for today, we have a very interesting topic for a very, very important role. And that is going to be part of the ERP team, which is controller as well as VP of finance. We are going to talk about their KPIs, the KPIs that are going to matter for them. So before we dig into the topic, we are going to start with everybody's intros. I am going to start with my intro. If you don't know me, Sam Gupta, principal at Elevate IQ. Elevate IQ is the independent ERP and digital transformation consulting firm. On that note, I am going to move to Chris. Chris, can I ask you to introduce?
Sure. Chris Gherardini, president of Turnkey Technologies, been implementing Dynamics ERP solutions for the past 30 plus years. So glad to be here and talking about the topic.
Okay, amazing. Thank you so much for being here, Chris. Bob, can I ask you to introduce yourself next?
Sure, Sam. I'm Bob Feathers. I work at Bindable. We are a SaaS provider in the InsurTech space, but I come here with over 30 years of manufacturing experience, including ERP implementations.
The cool space. Thank you so much for being here, Bob. Ben, can I ask you to introduce yourself next?
Yep, thanks, Sam. Good to be back. Ben Cole, president of ERP Connect. Our focus is on developing and deploying apps and app stores for D365 Business Central and Business Central Consulting in general.
Okay, amazing. Thank you so much for being here, Ben. Nirav, can I ask you to introduce yourself next?
Yeah, absolutely. Thanks for having me on, Sam. Nirav Shah, CEO of AdService ERP. We implement Acumatica solutions in many different industries, primarily in the D2C manufacturing space. So happy to be here and talk about this topic.
Okay, amazing. Thank you so much for being here, Nirav. If you're in the audience and joining for the first time, make sure you guys post your questions and comments. We typically try to cover them during the show. If you run out of time, our panelists are going to make sure that you guys are going to receive your answers. On that note, I am going to start with the first question with Chris. And Chris, when I heard the term controller for the first time, it was in one of the CPA meetings, okay? So I'll give you a little backstory there. And I had no idea what controller really meant. Okay, so in this particular case, they were like, you know what, we don't necessarily make any decisions here. Obviously, you came here to get some sort of leads, right? And you need to talk to at least at the controller level. And that's when I sort of came to know the term controller, who they are. And overall, when you look at the controller term, it differs when you talk about the controller in the US, UK. I don't know if you have any sort of background there. There's a little difference in terms of what controllers do.
Yeah, organizational size certainly impacts those roles because, you think about C-suite. SMB, small companies don't always have chief financial officers. They don't always have a VP finance. Do they have a controller, accounting manager? I mean, it's interesting how those roles change just the title based on size. But in smaller and medium organizations, a controller could be the highest level accounting authority, depending on the size of the organization. So, and you're right, in international markets, it changes. They have different definitions about what people do and what's a finance director versus a controller versus so to your point. So but the word control, it implies what you'd expect. Can they control certain aspects of the business from their perspective and from their position? And I think as we pivot into the topic of BI, business intelligence, about the controller, right? What do they need to see to do their job, right? What is the key thing a controller should do? What are they controlling? Most important thing to control? Cash, right? It's always cash is king. We start with cash. Yeah, I'll get to inventory later, but cash. And so I think first and foremost, as you look at, just the visibility and, what does cash look like though? So cash could be its asset, right? We're working the balance sheet to some degree. We're certainly looking at income statement because it impacts cash flow, but cash position, cash flow, cash forecast, again, these are huge indicators as you think about just what do they tell you a lot. They tell you a lot about behavior on your receivables and your purchasing. They also tell you about trends that may be occurring in sales and in procurement and in inventory that nobody knows about. Hey, why is my cash going down if my sales are going up? Is AR going up? Oh, somebody's buying more inventory. So you heard me just mention multiple dimensions around cash that kind of takes that step down into asset changes in asset value. And so, again, I'm starting there. It's the core part of the balance sheet. But certainly cash flow and being able to drill down, that's the big deal. Macro, micro, and growth so we talked about assets a little bit, receivables. And again, it's a macro, micro where, okay, what are we looking for? We're looking for average days. I mean, just high level metrics that say, hey, how is my AR doing? Am I, if I'm offering 30-day terms and I'm at 33 or 34, hey, I'm good. I'm at 47. But again, to have almost trending where I get a view of, okay, how is performance of days outstanding sales, right? Hey, you know what? We're doing a good job, meaning it tells them about the collections department is doing their job. Again, inventory value, changes in inventory value, right? What am I looking at? I did a cash flow 12-month rolling cash flow or cash statement. People are like, okay, why are these two lines going the same way if this one's going here? It means there's a problem. It means there's an accounting booking entry. So at a macro level, just again, some graphical illustrations of cash, receivables, inventory, liabilities, just the big ones can really, really give them a quick, but like I said, it goes beyond that. And I'm sure the guys here go, good, he didn't say everything.
Okay, amazing. Thank you so much, Chris, for the description. And I hope people are going to have something to talk about, obviously. And I'm going to actually come back to you for the follow-up question. Before I do that, Abu, do you want to introduce yourself?
I'm sorry. Did I get long-winded on that? That was just an intro or the first question? Anyway.
No, you did not. I mean, see.
Oh, he just jumped in.
Job.
Sorry about that. Sorry being late today, guys. But my name is Abu. I lead the group here at Penny. We're a Sage X3 partner, and I've been a finance consultant for about 15 years. So glad to be here on the show and excited to hear more about it.
Amazing. Thank you so much for being here, Abu. And Chris, I'm actually coming back to you for the follow-up question.
Sure.
I just wanted to make sure that we are able to make room for Abu for the introduction. So in today's topic, we have two different roles, Chris. So maybe you may want to touch a little bit on that. So controller and VP of finance, right? Depending upon the organization, I guess these roles could be different. They sort of split the responsibility, and based on the roles, they are going to have different KPIs. So do you want to touch a little bit on that, Chris?
And again, if you look at, and I'm not an expert at the differentiating between the VP finance and that, but certainly in the finance role, as we talked about, there's levels of seniority in an organization, and end up with a VP finance, we're in a larger org, and so again, is he more capital focused? Is it acquisitions, return on equity? Again, what is he top of mind for if there's investment strategies or even some of the larger macro development? Again, typically in the CFO role, he's looking at acquisition. How do I grow the business myself? And I'm not a sales guy. So in the VP finances, you look at, okay, how are we using the balance sheet in the business to grow the business, either that through acquisitions or otherwise. But again, it may be a return on capital. It may be a return on equity play, and he may have just a different set of metrics where if the controller is that role, they're really still looking macro. Okay, are the macro operations working well, but at a higher level? If there is both roles, okay, she's going to tell me if there's a problem in AR.
Yeah.
But maybe that's it. And that would be my first guess is I'm looking at, equities and return on equities. And even if we're looking at moving into other markets, again, high level forecasting, right? How does that person see the future? I think the controller is probably going to be more real time, a little bit trailing. Is the VP finance going to be more concerned about real time and forecast? I think that may be a differentiating perspectives as well as you look at how do they lay out the trends and help guide the business more strategically in that capacity. So.
Yeah, could not agree more. Thank you so much, Chris, for that. So, Bob, I'm actually coming over to you, and I think you asked one question related to do you weigh your AR AP days outstanding? I mean, that could be a great question. I don't know if you want to cover that. But, overall, I'll give some more layers overall in my experience, and obviously you guys can share your experience in terms of what you have seen, because each industry is going to be different. Each company is going to be different. The way they are going to be defining these roles, sometimes they are all over the place. Okay. But in my experience, typically controller is going to be the director of accounting. That's how, I have heard people defining, okay, they are supposed to be director of accounting in the UK. And they were this discussion is coming from LinkedIn, so I don't know how much noise is there, okay? Because LinkedIn, you never know how true that could be, right? So they were talking about in the UK, the controller is slightly more FP&A role. And the reason why I am bringing this is because FP&A is a very different function in general, the way FP&A operates, because that's going to be your forecasting. That's not very operational role, right? But in the US, the controller is going to be slightly more operational role, where they are defining the chart of account, making sure where everything is going, making sure, approving the transactions. So that's how they sort of define. So I don't know, Bob, what's been your experience overall when you distinguish between your controller as well as VP of finance role, and then what are going to be their KPIs?
Yeah, absolutely. So, kind of to go on what Chris was saying, and then that, again, depending on the size of the organization, but in my experience, again, the controller really was overseeing that balance sheet and income statement. They're really kind of the control. They were making sure that all the things were happening. And so again, there's all those components to it, right? There's cash. They're just making sure, usually the controllers I dealt with is bank reconciliation, just like you can. Is cash being handled? What are we doing with cash? But then again, making sure that the accounts receivable clerk is doing their job, and then the accounts payable is doing their job, and just kind of keeping an eye on that. And then really, to me, again, going back to this whole cash thing, is inventory. Because if you're in the manufacturing, that's really one of the biggest components, is this whole idea of inventory. And to Chris's point too, it's like there's this whole control of inventory and making sure, as again, you're not buying too much, you're buying at the right time. So there really then goes back to this whole idea, right? It's control. So what I'm really trying to figure out is I'm trying to do planning. So it's kind of this whole planning piece of like, what do I plan to do? What am I think I'm going to know? What am I doing there? Then trying to come up with predictability. Like, how do I create predictability in that model to kind of understand like where I think I'm going to go, and if I see anomalies, I know what to do. Like, oh, I can predict where this might change, and I just need to be mindful of that, or make changes. Kind of say, hey guys, don't forget about this because I see this happening. And then results, right? Then you're also then going through the results side, which is making sure that, going back to this transactions, making sure that things happen the way they're supposed to happen, which again, there's lots of, I'm sure we'll get into the end, and there are lots of good horror stories about things that you kind of go, you finally get to the end of the thing, and then you go back and look at the rearview mirror, you're like, what is going on here? And how did we miss this? And things like that. So again, the controller, to me, my experience was, they really were overseeing that whole balance sheet and income statement, and just making sure all these things were going through and interfacing with all those people inside the company to make sure those things are happening correctly.
Yeah, could not agree more. And I think, you are absolutely right about the controller role overall in terms of owning the income statement as well as the balance sheet. In fact, let me see, if you look at some of the titles from the controller perspective, there are also going to be, and I don't know whether you guys have seen this or not, today I was looking at one of the titles, and this was like international controller, business unit controller. So there are different layers, and I think the way it's almost like general manager, but more from the finance perspective. I don't know whether you agree with that or not, Bob. Any other follow-up commentary there by any chance?
Yeah, again, you can kind of talk about, so again, some of the controllers that I dealt with too, is they were also in charge of kind of the business intelligence, right? So they were kind of help to take that information, gather it, and then report back out a little bit. Like, that was kind of, again, they're building the balance sheet and the income statement, and then reporting back out to the executive team. Like, here are the results, here's what's going on, here are the trends. Maybe it's down to the people below them or some people below, and saying, here's the things you guys need to look at. So again, there's this kind of, there's gathering, there's controlling, and then there's also reporting back out. So again, there's usually a business intelligence piece, hopefully. Again, you may have, again, depending on the size of your company, you may have somebody just doing that. But a lot of times in my case, in the smaller, small, medium size, the controller was also, again, controlling a lot of that reporting, or at least supporting a lot of that reporting to get it out there.
Okay, amazing. Thank you so much, Bob, for that. So, Ben, I'm coming over to you, and I know that you deal with a lot of different smaller businesses, especially in the services space. And service space, in my experience, is slightly trickier. Okay, there are some easier services spaces, but some of the service spaces could be very difficult, and the reason for that is because you don't sort of have that formalized queue, you don't have formalized project, so it becomes very difficult how to sort of map the chart of accounts. How are you going to sort of map your project? Sometimes a project could be a job, depending upon the industry that you might be dealing with, because that project could be very short run. You might not go through the same process that you might go, let's say, in the ERP space, when your projects could be very long standing. So overall, when you look at the controller role, they play a very, 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 very important role in general in the evolution of the company, because they are probably the first people who are going to be coding everything and automating the accounting before it happens in the QuickBooks. So I don't know, Ben, over to you. Have you seen similar things in your experience? How do you sort of distinguish between controller and VP of finance role, and what are the top KPIs for them? Ben, over to you.
Yeah, no, definitely. I think going off of some of Chris's and Bob's points, spot on in terms of just kind of the, almost fluidness of controller to VP of finance in some terms, right? Because a lot of companies I work with, especially, are rapidly growing. So sometimes, and more often than not, the first finance or accounting person that they're hiring, you can call it whatever title you want, call it controller, call it VP finance, right? But it really starts at being a controller on day one and turning into a VP of finance or turning into a CFO. So it really depends for me on size of the company, right? If I go to a Fortune 500 company, you're going to have multiple controllers, you're going to have multiple VP of finances, maybe a CFO, and that controller is kind of playing liaison between VP of finance, who's more strategic, and their staff accountants who are more, I'll call it operational, right? So you've got that mix between take what we can operationally and give it to the folks who are making this strategic decision. So again, it's pretty fluid in terms of company size and kind of how things grow. But at the end of the day, and if I looked at like a, utopian world of accounting group at a company, right? That controller to me is really, kind of that chief bean counter, right? They need to make sure that the data is good. They need to make sure that all the T's are crossed, all the I's are dotted, and making sure that their staff is getting them the data that they need in a timely manner and in an accurate manner. So I know I was on a podcast, I believe previously with Chris, where we talked for an hour just about cash. So I would definitely agree that cash is king. But in the controller's case, I would also argue that data is king, because you can't get a lot of that reporting and analytics if the data is just garbage, right? So I don't even start to look at inventory or cash flow or anything like that until I look at, does my AR and AP tie subledger to general ledger? If not, I need to figure that out before I can build any sort of KPIs and reports. So when I look at controller KPIs first, I'm really looking at balance checks. Do things tie out? Does income statement flow to balance sheet correctly? Does the balance sheet balance? You'd be surprised how often it doesn't somehow. Not sure how that happens, but it seems to happen more often than we'd like. And really getting kind of that foundation in place before we start to build, whatever we're about to build. If you spend that time constructing the chart of accounts and constructing the rules and regulations and procedures that need to be in place from a internal controls and audit standpoint, I think it enables you to grow much quicker at a much less headache rate, right? Because you have the structure in place that gives you what you need going forward. So when I look at it, again, really depends on company size and what you're asking and looking for. But in kind of that utopian world for me, it's that liaison between your staff, AR, AP clerks, whatever else you might have, treasury or whatnot, and then the VP of finance or the CFO who's making those strategic decisions. So again, in that case, data's king, and I need the data to be perfect before I can start to forecast out any sort of KPIs, really, in my opinion.
So that's a very interesting commentary there. And I especially loved your comment related to balance sheet, not balancing. And you definitely need to give me a little story there. My understanding was that it would balance probably in the QuickBooks as well. But maybe people are far more creative now.
It always works, Sam. Come on, we know that.
People are creative.
Any other KPIs there by any chance, Ben, when you are looking at, let's say, if I look at my balance sheet, I'm a controller. I want to make sure that my balance sheet is going to balance, okay? And I'm creating some sort of KPIs that I can take a look so that it's always going to balance. In your experience, let's say if it does not balance, how would you create a control for that?
Yeah, so we've actually built a lot of tools around like balance checks and things like that. So kind of like I mentioned, AR and AP, inventory are pretty much, and cash are pretty much the first four things I'd look at, because those are always going to have, or at least they should have, a subledger, and that subledger data should be flowing through to your balance sheet. So those are the first kind of, quote unquote KPIs that I would look at when analyzing the health of a balance sheet. And then, more often than not, depending on how bad it is, just take some digging into to correct. But after that is, all good. Some of the top KPIs I would say are looking at your AP, AR, and cash, right? Because AP and AR are going to lead to cash. And from an AP side, really evaluating it to see how you're performing for your vendors. Are there any, payment discounts that we're not taking advantage of that we could to save some money? And really just the health overall of both making sure your vendors are paid on time within the realm of their payment terms, and really optimizing your cash flow there. Same on AR, really evaluating your customers to see average paydays of customers and things like that in order to say, who are good customers, who are, customers in the middle, and who are customers that aren't so hot in terms of paying on time, and really doing some analysis around that, because it all leads to that cash position, that cash flow. A lot of different tools for cash flow out there. A lot are just going to look at when do we think the cash is going to come in. That's not a great way to forecast cash. You should be forecasting on what's your customer's behavior in the past. I don't care if your payment terms are net 30. If they always pay on 60, just because the payment terms are 30, they're probably not going to pay on 30. They're probably going to pay on 60. So I'd say AR, AP, all leading to cash. Again, cash is king, but those would be my top three probably KPIs when looking at controller duties.
Okay, amazing. Thank you so much, man, for that. So, Nirav, I'm coming over to you now. And in your experience, how do the controller as well as VP of finance role differ? Do they have different KPIs, same KPIs? Any KPIs that you have seen in your experience for these two roles?
Yeah, no, I think, both these different positions have different KPIs. They have different viewpoints in the business, right? And once you start identifying, what each position is doing, it pretty quickly becomes clear on the different APIs that you're gonna introduce into the company and have conversation around. So examples of that, I was just jotting some stuff down here. For a controller, for example, could be gross profit margin, right? They need to know based on sales and costs, what's our margin right now, right? Are we making our margin? Are we not making our margin? What's going on with manufacturing? That kind of starts cascading in a waterfall, and let's get a little bit more efficient, start identifying trouble issues. Another one is operating expense ratio, right? That's another one that you could look at your expenses that are flowing through here. How is it differing to my operations overall? What's it doing with my overhead and all that, right? Now you look at the finance side, right? Strategically looking at investing and more treasury type of functionality. You're looking at debt to equity ratios, essentially for a more finance oriented type of role, right? You go back to the accounting side, a controller, day sales outstanding, right? It's not really financial, but that's more on the booking side. Like saying, hey, how are you essentially going to go ahead and take those sales, and why are they staying out there longer than they should, right? Then you're looking at return on investment, more on the finance side, and then you're going to cash conversion cycle, right? That could be both, right? Depending on who the audience is, who are we talking to at the end of the day? So if we try to go ahead and identify strategically what these positions are going to be doing, what are they looking at, developing those KPIs strategic for that position to become successful, because you can't have one person look at all the KPIs. You need to have the right person look at the right KPIs so they could get that continuing feedback from measuring that KPI to make business decisions, refining that KPI, and improving productivity for the organization overall.
Okay, amazing insights there. And we have the contribution from the background as well. I guess, somebody super excited about the controller KPIs.
I apologize about that.
No, you don't have to.
Get stuck here.
Thank you so much, Nirav, for that. So I'm going to have one follow-up question, I guess, and that is going to be, when I look at and maybe I will start with Abu for now, Nirav. If you want.
Let me take care of that. Yep.
Yeah.
Give me one moment.
Thank you so much. So Abu, when I look at the controller role, I think one of the things that nobody has brought up so far, in my experience, when I look at the controller role, I always thought of the controller role as slightly more operational in nature. Okay. And when I say operational, meaning costing. Okay. Costing, I think controllers are the first ones who bring the costing mindset in the organization. Before that, they are going to have a lot of macro KPIs, but they don't sort of understand, how much the real cost of a product or project is until the controller is really introduced in the operations, to be honest. And that is going to be, let's say, if the business or business unit is going to be roughly $10-20 million in revenue, then only they sort of start tightening the belt in terms of the costing, the product offering, looking at the margins, at the product level. So Abu, I don't know, Amisi, do you share that opinion? What do you think?
Yeah, I mean, it's definitely one of those factors. I mean, you have cost control, especially in the manufacturing environment. You have a special accountant just doing costing for the work orders. But before, it's another metric. Before we get into it, I think from my perspective, the definition of a controller would be person responsible for making sure the accounting is done properly within the company, right? Whether the journal entries are getting posted properly, is your month end, that's probably one of the biggest thing which I think we talked about. The controller's job is to make sure that the month end is done properly, it's done correctly, right? Is your inventory map equal to your subledger GL accounts? Is your AR equal to your subledger account? So making sure all of that data is correct, that would be the key part of the controller's job, is to make sure month end is on time, right? And the other key aspect would be, for a controller position, would be reporting. So that would be like tax reporting. That would be, everybody talked about balance sheet and income statement. Obviously, that's an important role. So from a reporting perspective to internal, from a balance sheet income perspective, and to external, for example, if you're a bank loan, you have a requirement to report. I have to report, they have very extensive reporting requirements. How much cash do you have, how much AR do you have, how much inventory is tied, a lot of different things that the controller has to report. A VP of finance, as the organization grows bigger, would have additional functions like budgeting and estimating. AR managers, AP managers, treasury would be important, right? So that cash availability as the organization grow, in my opinion, would be for a treasurer to manage, to make sure that they have enough cash in the company to fulfill the AR and the AP obligations, right? So finance, the VP of finance would be now then overlooking all of these key functions, and especially if it's a public company, then financial reporting to external stock exchange, external investors, that also becomes much more important, and then which is outside of the controller role generally, financial reporting managers. So that way, from my perspective, the key differentiation: controller responsible for making sure that the accounting is done on time and correctly, right? Rather than making more business decision. His role is to support the decision making, making sure that the data is available on time to support it. So from that perspective, if you look at it, then the process has become more. They have a general checklist. Is the AR closed? Have you invoiced everything out? Are all the invoices paid can we close the month from an AP perspective? Can we close the stock accounting period? Right. So if you're unable to close the stock accounting period, that means your month end is getting delayed, right? So that would be the operational, the KPIs that we generally talk to controllers about, making sure that they are meeting those KPIs. And then you can obviously have cost controllers, and you can have different other aspects. You can subdivide that role in different ways and methods. But those will be the key KPIs, in my opinion.
Very interesting perspective there, and I like the layer that you brought in related to month end. And typically when you look at month end, when you look at any journey of the company, right? I mean, see, in their journey, initially they are probably not going to have any sort of strict financial periods, okay? They are going to define them probably, I don't know at what point they sort of become very regulated, that okay, fifth is the financial close. After that, we are not going to be posting any transactions. Nobody's going to be allowed. So that's when I guess they are going to have some sort of KPI. Go ahead, Abu. Sorry.
Yeah, so I think those hard lines come in when you have, for example, now the company has grown and now they've taken a large bank loan. Believe me, they have some very strict reporting requirements, right? The banks would need the reports on the 5th or the 6th. They will define those dates. And if you consistently miss those deadlines, then they'll pull your credit lines, for example.
Yep.
So when you start defining those dates, that's when the hard deadlines start coming into place. I need the books closed by the 5th, because the books are not closed, and if it means that my data, my inventory data is changing, my AR data is changing, that it means what I'm reporting to the bank no longer works, right? It has data inaccuracy. If you're a stock listed company, and you can be a startup and be listed on the stock exchange, right? Some very different controller requirements come into play, right? So you have to have, like, you cannot miss a reporting deadline on the stock exchange. If you miss it twice, you cannot be the CFO any longer, right? You can miss your financial license. So those are the times when those deadlines become very strict. If you're a mid-sized, small-size organization, if you're still running on QuickBooks, maybe you just do once a year, right? Nobody cares. But if you're trying to differentiate between a controller and a VP, that's typically between larger organizations, and they'll start to have more regulated closing processes in place.
Go ahead, Bob. Go ahead.
Yeah, I just want to kind of pull this thread a little more to tie some of these thoughts together, because I really appreciate the month-end piece. So from a micro level, right, this whole kind of controller, right, controlling things this means, so certainly you need to have deadlines, right? We kind of talked about planning, predictability, and results. You need to know those results so you can keep moving forward, because you don't really know what you've done. How do you know what you're doing, right? So you kind of, otherwise you just always, no one knows. But when we're talking about the data, we're talking about this month-end close. And okay, we need to close by X. We can start making decisions about where we are and making sure we don't get off track. I need to make sure my data is right, which also means I need to make sure my processes are right. So if you think about the controller, here's another component of this at a micro level, which is helping to build the processes within the organization with all those teams, and just really making sure they're buttoned up so you can, in fact, meet those deadlines and meet those goals. So again, controllers should have some level of that being able to document these things and build processes and work with the teams and work with the systems and get the right data, so that's kind of part of that whole component. I want to touch on anything about inventory. Yes, in my experience, I would think, or I always wanted my controllers to have more inventory and kind of cost accounting savvy. They just never did. And that's really coming back to kind of being more kind of the accountant side, more that, whether you're being really more the strategic kind of making sure the books are right versus the operational side. In my experience, none of them were operational. They were more on the other side. But luckily you had cost accountants, right? You have the operational guy to help you out, but it would be helpful sometimes they had a little better understanding of why things work or don't work. Going back to which Nirav said, which is gross profit. I mean, that's really one of the baselines to building cash is, are we making stuff profitably? We're out there, the plan, is it working? Are we, do we have all the right people? Do we have all the right equipment? Do we have all the right materials, the right time? Just all those types of things start to come into play at that kind of micro level.
Okay, amazing insights there. And guys, if you have any comments or stories, please feel free to unmute yourself and just let me know. Chris, coming over to you. Okay, deadlines. Very interesting, right? The reason why deadlines matter is if you have to deal with guys like me, okay, you don't want to be asking for timesheets as well as receipts. Okay, you are never going to get them unless you define a deadline.
I think they're performance objectives. And I think that it's like setting budgets. No budget, no target. Set a target. And so we live in a world where we've got electronic checklists. We can tell who's not done what they should do so that we can drive the month-end process, because guess what? It impacts the business. It does. And, you mentioned timesheets, WIP, project managers. If you look at the dependencies that other people have on data, and we go back to data, right, Ben? You need the data, and you need it timely, and you need to be able to see it timely. And I think that month-end performance checklist, it's a big deal, because one of the things, how long does it take you to close your month? Oh my God, it's 6 weeks before we get a financial. That's rear view mirror stuff, dudes. We can't live like that. You can't. And so anyway, we keep going on that. Yeah, a little red while you're doing that. VP Finance, AKA CFO. It's interesting they interchange that a little bit, but we didn't mention risk. But I was right about investment management. So if you think about it at a macro level, the controller, they're not worried about risk, and they really aren't worried about investments and return on investments. But that's where that higher level role is. You look at and I think it's a leadership position versus a controller may not be in that upper circle. So a few differentiators. But again, I've heard a lot of great KPIs, and you still go back to what are the ones that help them really indirectly see what's going on, because based on experience, there's a lot of KPIs that are misleading, right? Oh, it looked great. It's accrual. What's that mean? That means it doesn't mean anything until the cash is in the bank, right? We're back to cash again. But, Bob was right about inventory. Inventory is a loose goose because, if you go back to mins and maxes, and even the controller and the guy above saying, well, how much are we trying to replenish, and what's our cube, and what's the capital at the min and the max, and then inventory turnovers, so then you go back to this, drilling down into some of that. And if the controllers really has that, because they should have some influence, they shouldn't say, oh, something's wrong, go figure it out. They again, to suggest as to which analysis you're looking at, right? non-moving, right? If they say, let's take a look at that capital item, that inventory is a balance sheet item, and get a little bit more lower level metrics on, okay, what's not moving? Meaning out of that 10 million in asset, you mean 8 million of it we haven't touched in 3 years? Oh, so, analysis to that next level about inventory and capital. And, on the AR side is, I'm lucky. I got AI climate in my world where, man, it's going to tell you right away, hey, he's not going to pay that invoice I just generated. He's not going to pay it. AI is going to tell you. So the advanced analytics for the controller on how to proactively manage different customers, those are features that are coming into play. But it is the controller's role to kind of oversee, even if they have a collections person, to escalate, to elevate, right, to the high priority items, even if there's like staff members in there. So anyway, just a few other examples there, but
great examples, and I'm probably going to give you a story there. Overall in terms of the KPIs, some of them could be, I don't know how meaningful they are going to be, but when you have been accountant for a very long time, you sort of develop the KPIs in your head that you can detect problems. Okay, that's going to be your AI that gets fired up, I guess, in your head. So this is a story coming from our business, and as the controller, you are not going to be reviewing every single transaction. You need to be reviewing the books at the macro level and figure out if everything is right or not. Once you file the taxes, and if anything happens after that, you are probably going to be in trouble, right? So in this particular case, and I'm talking about our own books. In this case, we had HST, the total amount of HST that gets filed, and the revenue that was there, which was higher than the actual revenue for the period. And we didn't notice. The bookkeeper did not notice, and the accountant actually came back. And they have not looked at any single transaction in our books because they don't see it. The only thing they see is the financial statement, and they could figure this out. So they have these KPIs in their head. I don't know what KPIs they keep, or but they have a lot of KPIs that they can use as a lever to identify whether there are going to be any sort of problems in the books or not. So Chris, any other follow-up commentary by any chance there?
And I think to that point, it's balance sheet components. And again, based on mixed experiences, we found some real problems on balance sheets for people that, it should have been on the P&L. And what's that tell you? You ain't making as much money as you think you're making. So, you go back to that liquidity factor. But again, to have other metrics that are tying out balance sheet that flag this ratio is inappropriate. I use the example where cash and AR were going down and sales looks good. I'm sorry, that mathematically is improper. Everybody's like, really? Well, yeah. I mean, if sales are good, either AR and cash is going down, AR should be going up, right? Where's that element? Where are we losing, right? And so that's one that you look at AR, you're like, AR looks good. It's actually getting better. Sales are good. Cash, well, I don't know what's happening there. But so triangulating metrics across the balance sheet and other experiences in looking at what is hitting in the assets and the liabilities that really is on the income statement should be prepaid expenses, accruals. I had this conversation with them. We found $250,000 in loss that was on the balance sheet that had to hit the P&L. Nobody knew. How could they didn't know? A lot of cash in the bank. The wheels are moving. But again, as you go back to getting down to that next level of, to your point, dependent metrics. So.
Yeah, great insight. Thank you so much, Chris, for that. Abu, do you have a comment? You unmuted yourself?
You can hear me, right?
Yeah.
So I think you were talking about metrics in terms of how your accountant is making sure the data is accurate. And I mean, I'll have a comment for you need a new bookkeeper, but
exactly.
but from an inventory perspective, the first thing, if you are running a distribution company or a manufacturing company, there are two key metrics which every controller looks at. When you run your inventory valuation report, does it match the GL or not, right? It never matches, right, at month end. So that's a key role, right? So they have to make sure that it matches every month. If they try to do it at the year end, it's a lot of data to fix, right? The other, if you're a manufacturing company, the thing that they look at, does your WIP matches your GL or not, right? That's another reconciliation aspect. So they have these kind of metrics where they run the reporting from a front end perspective, from an inventory management perspective, and then they compare it to the sub ledger, right? So depending on your company type, you can have those key metrics that you can run and match the reporting with the sub ledger to figure out, is your data on the right track or not. If it's not matching, that's the first indication you're missing something.
Yeah, could not agree more. Thank you so much, Abu, for that. Bob, I'm coming over to you, and I'm actually going to extend on the story. And the only reason why I think these guys were able to catch, because your HST revenue that you have cannot be higher than your revenue itself for the period. And if it were lower, I don't think it will ever get flagged. Okay, so that's very interesting as well, because you don't really have. I mean, I don't know if there are any sort of KPIs to tie in your sales taxes with the revenue. So that's a very interesting layer overall. And I guess, yeah, any KPIs in your experience that you have seen that really control the books, because obviously the controllers are not going to monitor every single transaction, Bob.
In terms of, sorry, went to revenue or tax? You said taxes, so I just want to make sure I wasn't missing.
So their job is to close on month end. They are only approving the transactions. They are not necessarily looking at every single transaction. Okay, they are probably looking at just the financial statements. Okay, right. So how do they make sure that the books are correct?
Holy water. Yeah, again, this is where you have to have, going back to Nirav was talking about, like your team, right? I think you really have to rely on having the right teams and understanding their processes and kind of looking for the anomalies. That's always like, there's different things. I think, we talk about, I just want to pull another, like talk about slow moving inventory. Like there's certainly areas you just got to be on top of that I think people get away from. But kind of back to your pieces, really essentially needed to look for the anomalies, right? So sometimes it's just very high level where you just have some basic reports, and kind of Chris hit upon it, like kind of that, like something doesn't look right, I have an anomaly, but just recognizing there's an anomaly. So trying to figure out what that anomaly looks like, meaning what's the percentage? Like when do I kind of go like something looks off, right? Just kind of figuring out what that number is to know when you need to look into something. And that's when you start to figure out, it's like when these trends start to go out of whack, that's when I need to, when it gets more than 5%, or is it 10%, what is that number? And so that means you need to be at the micro level and really have an understanding of what things affect these things. What would make this thing go off the rails? And sometimes you not recognize it because you're not thinking about it. One might be you have to bring on a new business. And so that new business, one of those inventory items, you used to have an inventory items that are in the pennies, and all of a sudden you bring a new inventory item that's in the dollars. And all of a sudden your inventory goes up significantly, but so do your sales. But again, you're just kind of making sure they don't go off the rails. And what might happen, right, is you need to bring inventory in. So your inventory all of a sudden goes up significantly, but your sales still haven't hit yet. And so you're like, wait, what's going on? And so again, I think it's sometimes the KPIs is really just creating that kind of large picture stuff and just knowing what an anomaly looks like, so you know where to look or when to look at it. I think that would be my advice.
Okay, amazing. Thank you so much, Bob, for that. So, Ben, I'm coming over to you. In your experience, any sort of less meaningful KPIs, I guess, is what I'm going to describe. I don't know if you have seen anything or any sort of controls that you have seen to avoid these issues, or, with respect to the anomaly comment that Bob has mentioned.
Yeah, no, I mean, I was going to talk more so in terms of kind of some of the anomalies that you had mentioned, and really how to, maybe avoid them before they ever come in. And I think it goes back to the process piece that Bob brought up, I don't know, maybe 15 or 20 minutes ago when we were on that topic. But defining really good processes is the first step into having, or avoiding some of these anomalies, right? And I think a lot of times what we're trying to do is automate those things out of the system so that you never even have to deal with them, right? So when looking at both data migration from a very initial standpoint of doing a project, all the way to ongoing data management, both in and out of the system, right? The more you can automate that, and the less and less you have to rely on people just typing that data in, the better off you're going to be. And kind of going with that data, right? Also looking at qualitative versus quantitative, right? So a lot of times people are just looking at the data, from a quantitative standpoint, and going off some of these KPIs, like you mentioned, Sam, they don't even know what they mean. So how am I supposed to make any sense out of a KPI if, I might know what it means, and I say, hey, everybody else go look at this really important KPI to make sure that you're doing your job right. And you never trained them how to look at that KPI. They're going to have no clue what it means. If some lines are going up, if every line's going up, they might say, oh, it's perfect, everything's going up, but your debt might be going up, or something might be going up that you don't want to be going up, right? So both looking at it from a qualitative and quantitative standpoint, really understanding what those KPIs mean. So I don't really have a top three in terms of like, don't track these KPIs. I would say the top three things I would say for really monitoring the KPIs are make sure that you train people on what the KPIs are, look at them quantitatively versus qualitatively, and then try to reduce any of the anomalies that come up through integration and automation and building the tools that will spot the differences for you so that you don't have to dig into things, right? So again, I talked about some of those things originally, just very basic AP/AR, bank balances and inventory balances. Those are things you could build a report or build a data point for and just click the button and run every week, and not letting it go 12 months before you look at it, looking at it every week and getting it sent to your email, or having a pop-up alert that says, hey, this is out of balance. It's really easy to fix one transaction. It's really difficult and time consuming and ultimately expensive when you have to call one of us that's on the phone to do it, right? It's going to cost a couple $100 an hour, and nobody's going to be happy about that. But if you do it proactively, you're going to save a lot of money and headache in the long term. And I think going back to the deadlines as well, a lot of times those deadlines are missed because people don't have enough time, which automation helps with, and things get reprioritized, especially at a small company when you have one controller over all of finance and accounting that is trying to juggle all these things. And then all of a sudden the founder goes, hey, go on this wild goose chase of finding something else. And now they can't close because they're going to listen to whatever the CEO says or founder says because they're the ones paying their bills, right? So it's a lot of different things all interacting at once. And I mean, really, if anybody had the secret sauce, they'd be a billionaire, because I don't think anybody's figured out the perfect ERP solution that never breaks yet. A lot of it comes down to people and process. Technology can only do so much.
Yeah, could not agree more. Thank you so much, Ben, for that. So Nirav, I'm coming over to you. And, when we look at the community in general, especially in the QuickBooks space, right? When you look at these founders, and to Ben's comment, when they are doing their accounting, they don't even understand, how the chart of accounts work, or how the accounting works for that matter, okay? If they are going to be, let's say, $5 million business, they are going to send all of their expenses to the accountant. Accountant is probably going to hire a bunch of bookkeepers. Obviously, their costing model is very different as well, right? So they are not going to have very seasoned bookkeeper who understand every single transaction that you are going to file, and they are going to code correctly. But you, as the founder, are responsible for whatever happens to your books and taxes. That's not your accountant. So talk about the trouble that you're inviting, let's say, if you are on QuickBooks, right? So I don't know, Nirav, if you have seen similar scenarios, and if you have seen any sort of KPIs control that you can keep as the controller to make sure that you are not going to be in trouble. Nirav, over to you.
Yeah, absolutely. Inventory is the first thing that comes to mind, right? A lot of controllers don't even understand what costing methods are.
Yep.
If you actually have a conversation on what's standard or average or FIFO or specific, right? Some are very clueless. A lot of it comes out during an ERP implementation. You're having this conversation. What's your costing method? Half is standard, half is FIFO, half is average, right? Well, I think right then and there is a red flag, right? There's a bunch of obviously mismanagement of the books potentially, but I think if you look at the bigger, kind of objective of KPIs, and whether it's for a controller or a VP, as an organization, you got to say, what opportunities are we missing? Right. And that could be all different places of the business, right? If you got to start somewhere, start this track. Okay, there's some opportunities that we're missing. And from there, set up a good goal for those opportunities, right? And that goal means, well, let's identify what we want to measure, right? Let's start honing on a specific KPI, a very clear plan and very clear metrics on data. You're going to take that information, actually put it to use and improve your processes, right? You want to configure your ERP system to ensure it could support the data flow so you get that proper KPI together on there. And then you're going to have a plan to monitor and provide continuous feedback. I think the biggest trap most controllers or VP of finance folks face when they have a KPI out there is a set it and forget it mentality. They just keep running the same thing without really understanding can that actually be better? Can we tighten that up somewhere? Right? What is that feedback plan, and how do we make that actually working more for us than just us reporting a specific number at the end of the day and seeing if that's good for us or not, right? And communicate that. KPI across the organization, right? How are we doing? What's the health of the business overall? A lot of controllers, I feel like, are more firefighters than they are actually adding value to the business, right? And I think a lot of that has to do with, that they're just so in tune with the ERP system. They're just so in tune on day to day and what's happening, right? For example, I was rolling off of completed an implementation for a project manufacturer, and this project accountant didn't know how to understand project WIP. And to me, that was like a big red flag there. So they never got to a point where they were actually analyzing whether their projects are profitable, at what point are they having waste, where they could remove waste from their projects, because they were still trying to understand the accounting piece of it, right? Understand the bare minimum already. So it comes down to, how do you set yourself up for success? Be honest about what you don't know. Set up a plan so you start understanding what you don't know, and then create feedback loops so what you now know you could correct and become better at it. And it's a step-by-step process.
Okay, amazing. Thank you so much, Nirav, for that. So, Abu, I'm coming over to you. Any meaningless KPIs, any comments over comments, any stories that you might be able to share?
So I think my question was asked, can a controller test every transaction, right?
Yeah.
I mean, they don't have to test every transaction, but at each month end, if they compare their ledger and sub ledgers and some of those key GL account balances, they'll know very quickly something is off. And then they have to drill down to the exact transaction which is causing it, right? So if you're a company of decent size, then you have auditors coming in, very soon they will know how good are your financial statements, right? They will enforce process control. Otherwise, you'll have a big audit bill at the end, right? If you're not managing your process. So in my opinion, controller absolutely has to know if something is going wrong, right? Whether it's at a transaction level, if he does not have the processes and controls in place, then that's not going to work out for him in the long run, right? Audit's going to come back with a big audit objection that your data is incorrect, right? Or you have serious inconsistencies in your data. So that would be my comment on that statement. That for controllers, if they look at the right, the GL balances and the sub ledgers, they can quickly figure out what's wrong with the data, right? And then they can drill down to the transaction level if the ERP system supports that reporting capability. So.
Okay, amazing. Thank you so much, Abu, for that. So we have some more room before we take the closing advice. I think it'll take roughly 5 minutes. So I have 2 to 3 minutes. Do you guys have any comments? Any open floor, guys? Anybody?
Yeah, I want to just go on what Nirav is saying is I really like this idea too. And this is probably a point that's missed a lot. And that is that kind of continuous improvement loop. I think what gets caught a lot is just like, hey, I've got these month-end close and I did my month-end close, and that's all we're concerned about, and everything ties out and it's great. And there really isn't that enough. I haven't seen in my time is enough of this, but can we do it better? And not just like faster, but like literally like going in there and again going to this understanding, like what is this data all about? And where are the things that I look at and go, great, everything ties out, but is this really good? Can it be better? And knowing how to look at it. And that is, again, the problem is I've seen in my time is that not enough people really understand the data. They just go, I know the data is right and it all ties out and I've got this thing and my process is right. That's great. But what are we doing to grow? Going back to Chris's like original point, what are we doing to grow the business? Like we're just kind of, you can kind of just keep going and going. And maybe there might one be like going like, hey guys, I need some more strategy. But at the end of the day, in order to fulfill those strategies, in order to do the growth, you need to improve the business. And to improve the business, you understand how those processes, what I can do to improve the business and what that means. And it's a lot of things, right? It's your throughput, it's the inventory controls, it's your cycle times, it's understanding the cycle times. It's also being true to going back to cost accounting, really in the micro level, making sure that you have the right work orders, right? How that whole thing is your system set up correctly, that you don't just make assumptions to what you think should be happening, because then you run your system thinking this is what I think is going to happen, and it doesn't really happen, and then you're like, don't know why, but the numbers tie out, so I'm good, so I don't mind. So I think Nirav really doing that thing that's a part for the controllers. Like, can they actually provide things to them, or at least advice to how do we improve the business, or where are things I know what this means, and how do I build upon this?
Yeah, going off your point, Bob, as well, a lot of times what I see is during the implementation, right, they look at this go live date as a point in time, and then they go, okay, we're live, everything's perfect. And I'm like, everything's never perfect at go live. It's far from perfect, and it exactly is an iterative process. Like, you're always looking to improve, and anybody who says it's perfect at go live is lying to you, because there's always something you got to fix. But yeah, just always looking at what can we do better, what can we do more efficiently, and there's always a phase 2, always a phase 3. So go live is very continuous. You might go live with financials, but there's still stuff to improve on inventory and other operational areas. So yeah, just always looking to get 1% better every day. It compounds on itself just like interest, and you'd be surprised how far you can get if you just do a little process improvement, every week even.
Yeah, could not agree more. Great comments, guys. Any other comments? 1, 2, 3.
Yeah, go live means we're done spending is what they think, Ben. That's the problem. They're like, can you go away, consultant, and get off my meter? And they're like, the business is able to, we'd rather just not spend, and we'll get, yeah, that's part of the problem. But you're exactly right, is it's not done. It's not done. And I think as you look at the problem on reporting and analytics is, it's not at the forefront of the thought process during the implementation. It's an afterthought. Hey, gosh, now we're done. Can we print reports? I kid you not. You laugh. That is in the cycle. And you know why? Because when they're going through implementation, well, there's no data. I can't see anything. But it's afterwards. Like, how do I run my report? Should have talked about it earlier. And most good professionals like us, like, we get in there and we start talking about what are we driving to in terms of the data so that we do deliver the outcomes of the KPIs. Because I just had an email. I'm sorry, I'm multitasking. Financial dimensions, right? Hey, how am I going to be able to analyze? It's relevant, and it's at the front end of the process so that it supports the back end reporting ambitions and analytics. But great conversations, guys.
There's always a support contract.
Yep, could not agree more, guys. So we can take just the closing advice right now, maybe short, 3 minutes in total, 5 people. Chris, closing advice?
It's the same story. As you get your KPIs and you find the favorite ones, which ones are actionable? Which ones help you move the business? They look, oh, these are good, and there's no action. Find some better ones. There's got to be stuff that needs attention, needs action. You're not looking at the right KPIs. If these are all good, that's fine. Get off the complacency, but look for something that helps you move the business.
Yeah, could not agree more. Thank you so much, Chris, for that. Bob, closing advice, please.
Again, keep in mind, right? It's the big picture view. And then how do I find the anomalies in the big picture view so I know where to look in the smaller picture? Just kind of understanding those components so I know where to look and when to look.
Could not agree more. Thank you so much, Bob, for that. Ben, closing advice, please.
Yeah, go back to data is king for the controller especially, and you have to have that holy trinity of people, process, and technology all working together. Otherwise, if one piece is missing, it's going to be really hard to get the others up to speed.
Yeah, great advice. Thank you so much, Ben, for that. Nirav, closing advice, please.
Yeah, it's pretty simple. Credits and debits equaling is just the first step. There's a lot more after that. So don't think that's enough, and you can always do more and improve the business.
Could not agree more. Thank you so much, Nirav, for that. Abu, closing advice, please.
I think having the financial processes and the data capture processes in place to support your KPI objective. A lot of companies create the KPIs, but then they realize that the data feeding in those KPIs is either inaccurate or not enough. So.
Yeah, could not agree more. Thank you so much, Abu, for that. So that's it for today. If you joined for the first time, this was part of our digital transformation series for which we meet every Thursday at 5:30 p.m. Eastern. So make sure you guys are going to be here next week. We are going to come back with another KPI topic. On that note, thanks everyone for tuning in.
Thanks, Sam.
Have a great night.